Hi, I'm Pattu from Freefincal. This is a demonstration of the Freefincal Robo Advisory template. The template is an Excel file that will work on Mac Excel as well as obviously Windows Excel. The file has got two or three minor macros, just a few lines of code. So when you open the file, you will have to enable macros, and every aspect of the robo template is customizable. There's a backend settings page, and you can go in there and change any settings that you like. You can also, it's completely open source, so you can also change it at will, customize it the way you want, and so on. So the Robo Advisory template was first released in June 2018. The current version is October 2020. When you buy the template, if there are any changes, updates made, I will send them to you, to everyone on the mailing list who have purchased the template. So there's no problem. All future updates will be given to you. And currently about more than 400 people are using the paid version. These include investors and financial advisors. There are many financial advisors who are using this Robo Advisory template on a daily basis to create financial plans for their clients. And in this walkthrough, I'm going to show you the features of the Robo Advisory template. And not every aspect of it. There are many of them. It's just not possible for me to sit and walk you through every cell. But I'll just give you the gist of what you can do and how you can benefit from using the template. The idea is to create a financial plan, a holistic financial plan, taking into account as many aspects of risk management, reward management, cash flows, as many of them as possible. So the first thing that you have to do when you open the file is enable macros. And this is the user agreement. You'll have to agree to it. There'll be a small window that asks you to agree. You'll have to agree to it. I've already done it. And so you'll have to go step by step. So this is step. So this is read me first, and then the next step is to enter your age, and then you have to enter whether you're married and the age of your spouse. And if you have made some mistakes or anything like that, if you want to just start afresh, you can hit the reset button. So all these black buttons that you're going to see, they're all macros, but they're not essential, I would say, to the operation of the template. But yes, you would need them to get some inputs, to get some outputs, excuse me. So you will have to have macros enabled in your Excel install. So let's look at a guy who is 30 years old, a spouse who is 32, and you can enter current monthly expenses and additional annual expenses that will persist in retirement. So these are annual expenses like medical insurance, car insurance, that kind of thing. Once you pay once a year. So I've just taken these as 40,000. Age at the end of the current year is 30. Age you wish to retire, we'll set this at 50. 60 is the maximum you can go. I don't want anybody to set a plan above 60, because by 60 at least everybody should be ready to retire, whether they can work more or not. Personally, my retirement age is 65, but I've set it only at 60 because at least by 60 you should be ready. And anyway, for most corporate employees, it's going to be 50, 55, or even probably less of the way things are going. So that's it. And then you can enter the rate at which your investments are going to increase. I would recommend it as 10%. These are some preset assumptions. Post-tax return expected from equity is 10%. Post-tax return expected from taxable fixed income is 6%. Tax-free fixed income is 7%. These are settings that you can go to the settings page. So if you click on these, you will see here it says settings C7. So you have to go to the settings page at the end of this and just change those inputs. Then it'll change here. So it's as simple as that. Then you can enter the value of current equity investments, taxable fixed income, tax-free fixed income, any lump sum benefits that you're going to get upon retirement, and so on. For young people, I just recommend leaving them as 0. But for older people, as you get closer and closer to retirement, you have a very good idea of what's going to happen. Then your current monthly pay, this is not actually necessary for the calculation, but it just gives you nice consolidated cash flow later on. You can enter that, but for now I'm just leaving it. Then these are income sources. So you may have a pension source, pension income, you can have rental income, and so on. So three such incomes that will actually increase year on year. In principle, it can increase. That's all available, and you can put it in there. You can have insurance policies that will mature, etc., that you can put it in there. So all that data can be inserted, and then you are going to go to step 3. Once you're done, you start here. So step 3 gives you just a basic summary of what you inputted, and then you have to click that, and that will give you the net corpus that's required. And if you scroll down, these are usually used for financial independence guys, people who want to retire in the next 2 years, 3 years, and so on. How they want to stress test their fire plans. Then these cells will populate. For the moment, this is a guy who's not going to retire anytime soon, so it's a normal retirement planning. So here you have the monthly investment that includes EPF, PPF, etc. That is the mandatory deduction. Sorry, not PPF. The mandatory deductions for that's done, the NPS or EPF contribution. So that's the monthly investment in fixed income, monthly investment in equity that you have to make. The total investment is given here. Then you can see, this gives you the asset allocation plan as well. How your equity should decrease, how your fixed income should increase as you head towards retirement. So everything is nicely planned for you, pre-planned. You don't need to worry about it. You can see the return assumptions here and how the portfolio return is gradually falling down. And you're taking all these de-risking ideas into account from day one. So you don't need to, after 5 years, people will say, I must reduce my equity allocation. You don't have to do that. Everything is done for you beforehand. And this is the cash schedule, the investment schedule, the amount of investment in equity to be done, how much amount of investment in fixed income to be done. This is the asset allocation schedule. So all you need to do is review this plan, change the inputs if any change is necessary every year, and then you come back here and you make sure then you look at your current investments and you check and make sure whether they are matching with this asset allocation, and then you are done. So you are basically able to review your retirement goals just by revisiting the robot advisory template once year and seeing whether you are able to stick to that asset allocation or any change is necessary. That you have to sometimes you have to play it by ear, but the roadmap is kind of drawn to you. So I was just telling somebody the other day that investing is like running a marathon, but you don't train for it. You just train on the fly. As you start running, you're training for a marathon. I know that doesn't make much sense, but that's how investing is. You are learning on the fly, but then you can't start running. You have to start running without training, but you shouldn't start running without knowing the route. You should know at least the route, and that route is what this template is giving you. And every year you're going to check with that route and check where you are and how things stand. So this is it. And then there is other goals. This is like non-recurring goals, but they're also not retirement. For example, you have a child called Aparna. You want to plan for her futures, which is 15 years from now. The current cost of her education is 35 lakhs. And then you have some inputs, other inputs, blah, 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 which is fairly self-evident. And then you click on this to find the investment account. Again, it will tell you the suggested how to change the equity, how to change the fixed income. It will tell you the amount of investment you need to make and so on. So, and then you have the schedule of investments, everything. So 6 such goals. You can see that's the first goal, second goal, third goal. 6 such goals are available in step 4A. 4B is a recurring goal. So let's say you want to take a holiday every 2 years, every 3 years, how to plan for that, how to start investing for that, and so on. That can be done here. Fairly self-evident cells. They'll just ask you the inputs, you have to put it in. That's it. Then step 5, there's not much of inputs here. I don't think there are any inputs here. It just tells you what to do. You can use my plumb line to select mutual fund. Plumb line is was started because of the robo advisory template, but the plumb line itself is free, as many of you know. The list of mutual funds that's updated. I used to update it every month, but I now do it every quarter. And it tells you what to do for short-term goals, less than 3 years, more than 3 years. It gives you some generic advice and so on, with some resources and so on. Then 6A is basically a cash flow summary. And so far what you have done is the so-called independent portfolio approach, where you consider a separate portfolio for retirement, a separate portfolio for Aparna, a separate portfolio for your each of your goals and so on. Then there's a unified portfolio approach, where you say all of those goals, long-term goals, are put together in one portfolio, and then you as and when you have your daughter's education, you're going to remove it. As and when you have son's education, you're going to remove some funds. You're going to then finally remove some funds for retirement and so on. So that's one way to do it, and this is planned. There are some inputs for this, how to invest, how you're going to invest for this and so on. You can add some inputs here, and finally the last step is the consolidated cash flow. And on the left extreme, you have the cash flow for the independent portfolio approach. You have how the corpus is increasing for the investments are increasing for retirement, investments for Aparna is increasing for other goals, your total. And then you have your salary, which if you had input there, it will show here. Any EMIs you have, you can input there and so on. So it will finally tell you whether you can actually invest for those goals or not. If you cannot invest, these cells will become red. If there are too many red cells, then you will have to probably rethink your goal assumptions, or you will have to choose the unified portfolio approach. In the unified portfolio approach, again, it's just one goal, and you're just investing in one bucket, and then as and when you need money for Aparna's education, in this case, you're going to withdraw it. It will tell you when to start withdrawing. A few years before Aparna's deadline comes and a need comes, you have to withdraw for her. Then you'll have to withdraw for your retirement and so on. Excuse me. So for that, you have to click on this macro to calculate. You have to set your input here, how much you're going to invest every year, and increase the investment every year and so on. Then you have the what I call as the DIY bucket calculator. So you have this. So what I've done here is for the retirement, when in the step 3, I have calculated this the corpus required. Now this is taken from let me just go here. Sorry, not the DIY calculator. I should just push it here. Sorry, the low stress buckets. So when I calculate the retirement corpus, what I'm trying to do is I am already assuming that the corpus that you will get upon retirement is going to be split into 4 buckets. One is called the income bucket, where the income is guaranteed for the first 15 years in retirement in basically zero risk investment. Then you have a low risk bucket, a medium risk bucket, and a high risk bucket. So the remainder of the corpus is distributed between among the low risk, medium risk, and high risk buckets. So these calculations are already done for you in the low stress buckets. There are no inputs here. That's why these sheets are red, because it's basically a backend sheet. But if you want, you can change the inputs here. You can just go in there and change any input you want. But generally, there are no user inputs to be done. But once you understand the sheet, you can go in and change it. I have a lot of users who do what they want. Then this is the settings page. I told you all the logic is given, how I am changing the asset allocation, how the returns are set. Everything is given here. You can go in there and change whatever you want, the way you want, and so on. And then there's a DIY bucket. Here you have a lot more flexibility with respect to the returns, what kind of buckets you want. If you don't want to change this, you can change it, but if you don't want to change this, there is a separate sandbox for you for the bucket retirement strategy, the bucket strategy. But these are all for slightly older guys, younger guys who are using it, who are like 20 years. You don't need to worry too much about DIY bucketing. But for financial advisors, for people who are close to retirement, then they will need, depending on the clients they work, they will need to change these buckets the way they want. So there are two options. They can change it here, or they can change it in the DIY. But they can have a generic bucket here for low stress without changing too much, and then they can do it as per the client requirement. They can change it, or as per the your own need, you can change it. So the DIY bucket is actually hidden. I have hidden it. So usually this will be like I'll have hidden it, and you basically have to unhide the sheet. There you go, and then you'll have to, that's when, so it'll be hidden. Usually you can unhide it if you want. So that's the summary of the retirement the robo advisory template. What I wanted to say was, finally, now if suppose this guy wants to so the age you wish to retire is 55. Now let's try and see. I don't remember if I've got it right. Suppose I want to set this as 54. Let him have a young spouse, and then if I do that, this is before retirement, right? So it's still not there. So let's say the guy wants to retire at 55 and he's already 55, and then I think these things will change a bit. You can see here now things have changed. Now you just click on it. You have a results will be suggested for a post-retirement plan. Key rule: if the amount that you have in hand is not sufficient to provide an inflation-protected income for the first 15 years, we recommend that you purchase an annuity. So you have a message that tells you what to do. And then if you come down here, this tells you the health of your corpus. It says you don't have enough money, you better buy a annuity plan, and so on. Of course, I am not, see that the reason for that is because I'm not given any current value of corpus. Suppose I give some amount. So let's say 1 crore, 100, 1, 2, 3, 4, 5, another crore, or 2 crores, or 3 crores, so 300, 1, 2, 3, 4, 5. Then I go back here, and then you see all that. Now you see everything is filled out. Just post-retirement suggestions to maintain. Let me just click it one more time. Yeah, so suggestions to maintain financial independence of the retirement, what to do, what are the buckets. So now you have the buckets, the bucket results come out. So when you have a young guy, you don't output the buckets, the bucket results explicitly, because the young guy doesn't want all those details. He just wants what is my corpus target. But for a guy who's retired, he needs to know how to manage the money. So all those, how much money is given in how much money is put in the low risk bucket, how much money is put in medium risk, blah blah blah. Sometimes it will say sorry, you're not financially independent. Sometimes it will say there's a gray area. You might need some professional advice, because there's always a gray area, and I don't mind saying that a robot advisory template, a machine cannot solve all human problems, right? Sometimes it can, sometimes it cannot. And when I feel that when I coded it in, when I felt that a human advisor, human expert is necessary, then the template will say a human advisor is necessary. So that's the gist of how you can use the robot advisory template. You can use it for creating a complete retirement plan with buckets included, complete goal, any other financial goal. You can use it after retirement for finding out how robust upon retirement, I should say, not after retirement. I think it will work after retirement as well, but upon retirement, it will tell you. After retirement means that you will have to set this at 60. If you set it beyond 60, for example, you can't. If it is 60 here, and if you can't set, I think there's a limit to what you can do here as well. So you can set that, let's say it's 75. Then let's see what happens here. Right, so it still gives you, but I mean, it says you already so it's going to give you a post retirement. So it assumes that anything above your retirement age, it gives you post retirement. I was worried I didn't code that in right, so I did. Thank you. It's been long. I'm redoing this calculator after at least 3 years almost. I'm revisiting this video on the full features of the calculator. Almost 3 years later, so I don't remember everything. So you can use it that way. It will give you the bucket strategy details for any age after your retirement age. So that's about it. So if you like the calculator, there are other posts as well, other features are there in the article. So go ahead, check that out, and go ahead and try the sheet. Bye bye.